Hey guys, welcome back to the channel. In today's video, I'm going to be providing a longer term market update for Ergo. I do apologize, it has been quite some time since my last Ergo video, but to be honest with you, when I'm looking here at this weekly chart, we're really just at the same price that we have been over the last few weeks. So there's really not too much that's changed here on my longer term stance and outlook, but I will be providing an update and especially looking here at the Ergo Bitcoin ratio, which has actually started to come back down and break down a little bit more from this previous range at the 7,000 Satoshi level. So I hope you guys do enjoy the content and the analysis. So with Ergo, there's really two key levels that we have been focusing on and paying attention to throughout the last several videos. The first level being the previous range low right around $1.62. And we discussed this as the key pivot point from back here in March of 2021, where Ergo found support off of and then later rallied on to make a new all-time high. That was also where the support held right here in July of 2022, bouncing pretty significantly off that level to later put in a local high up around 230%. And then what we discussed in the last video was how we had started to see a reclaim back here in January. The price was holding it and consolidating above, but then we started to see the breakdown. So this is really just telling me that the price is chopping around this level. And instead of this level at $1.62 being very strong support or very strong resistance, we're more or less seeing that as a middle point, a midpoint of this last few months of consolidation and ranging. And we can look to this last few months with the range highs potentially around $2, the highs beginning back here in the beginning of the year, and then the lows right around $1.38 where we had the lows from back here in March. You can see the midpoint of that little range we have formed does line up pretty well to this level at $1.62. A little bit clearer here if I zoom into the daily chart. Again, you can see ever since the beginning of this year, we have basically just been within this shorter term range. We have the support at the range lows at $1.38, where we had the bottom off of in March, and then the resistance at the range highs right around $2. We actually had two retests of that, one rejection right here in January, and then another rejection right here in the beginning of February. So until the price really does give us a clear and defined breakout, whether that is to the downside losing the support at $1.38 or breaking to the upside and reclaiming the $2 level of resistance, until we get a breakout, we really can't assume anything else than just continuing to consolidate within this range. If the price does start to make its way back up, we could look to the mid-range as resistance. If we come back down, we could look to the range lows as support. But until we have a clear and defined break outside of this range, you really can't expect too much else than just what we have been seeing since the beginning of the year, which has been going sideways for a very long period of time and then going sideways for a very long period of time. So at this point, that's sort of why I haven't been providing as frequent updates, because there's really not too much that we can take away. We could look to some of the day-to-day moves, but those tend to be a little less important because we had this rally in March, but that got rejected at the mid-range. We've had this slow bleed down, but we really haven't broken down support. So a lot of this is just insignificant when I'm looking back here at the weekly time frame. And I think that in general, if we're looking for a longer term trend, we really have to just wait and be patient here, because there's just not too many signs here when we're looking in, especially zooming into that daily time frame. But if we were to, for example, break outside of this range, to the downside, the support would be right around $1.18, the lows from back here in December, and then previously being highs from back here in August of 2020. If we were to see a breakout coming back and reclaiming the $2 level of resistance, then we could start to target the middle of this bigger and longer term range with the highs at $4.35, the lows at $1.62, and that level would lie right around $2.70. So more or less, if we were to see the breakout above this range high coming back and reclaiming that, then we could look to that level as our next major target. But again, that has not happened. We're still within this shorter term range. We're still sort of range bound, consolidating, and we have to keep our eyes open to the fact that we might just have a few more weeks of going sideways, and it could be pretty boring, especially if we're seeing Bitcoin continue to rally. And that's basically what we have seen. Again, over the last few weeks, Ergo has gone sideways, but Bitcoin itself has made a more impressive rally, leading it up to $28,000, which is actually the highest point it has seen since May of 2022. So we're seeing a little bit of underperformance with Ergo, especially with many other altcoins. It's pretty much just following that general market, the general altcoin market, where altcoins are bleeding, and you can see that with the Ergo Bitcoin ratio breaking down and losing the range lows right around 7,000 Satoshis, previously being support from back here in February, in May, and then for a few months right here in the beginning of this year. So now that we have started to see a breakdown, we're coming back down and we're generally retesting a lot of this price action from the bull run of 2021. And there is some support in this region. We do have a cluster of price action that we can look to as potential support. But generally, I don't think that Ergo is going to perform too well against Bitcoin as long as Bitcoin is doing these very impressive rallies where it just goes up and up and up and then consolidates, not giving altcoins time to catch up, and then it continues to break out. So as long as that pattern does play out, I do expect the Bitcoin dominance to increase, and therefore the Ergo Bitcoin ratio most likely will not perform well. That's not to say that we have to have a continued leg down, but I do not expect Ergo to outperform Bitcoin in the event that, say, Bitcoin continues up higher, breaks into the 30 to 32K range, for example. And that's just something that we naturally expect, especially at this stage of the market cycle. The same exact thing happened in 2019. So if we look here at the Bitcoin dominance, for example, you can see that same pattern played out where from back here in the last market cycle, it had a very impressive rally, basically from this local low at around 53% in April of 2019 up into around 72% in September of 2019. Similar thing happening over here the last few months. So that's just sort of where I stand with the altcoins, especially with Ergo, with that Ergo Bitcoin ratio. But again, the Bitcoin dominance certainly will not increase forever. And I do think at one point we will start to see the altcoins gain a lot more traction to the upside and start having their own breakouts where we do see impressive rallies, but I just don't think that's something that we can expect at this exact stage of the market cycle. If Bitcoin starts to cool down and it has a little bit more confidence that we have exited the bear market, then we're going to see investors take on a little bit more risk and then potentially flow some of that capital into the altcoins. But as it stands right now, that's just not something that I would be paying attention to. For Ergo, I just think that if it is to move up, that would just mean that Bitcoin is more or less leading the market at a move that is more significant in percent. I hope you guys enjoyed the content, and as always, I'll see you in the next one.